Who's got the bigger debt problem, the US or China? If you haven't seen me before, I used to advise portfolio managers at Merrill, Lynch and Morgan Stanley, but I left the corporate world and started this channel to do 3 things. Number 1, teach people how to take control of their finances. Number 2, push back against the tsunami of bad information out there. And number 3, make you smarter by bringing you financial news without the bias and fear mongering. This video falls into the second and third categories. And today I'm going to teach you why not all debt is created equally and give you a definitive answer to the hotly debated question: does the USA or China have a bigger debt problem? Let's dive in.
Began with China. Their economy is weakening and it's pulling down global growth.
US and China, they're engaged in a verbal tussle over debt issue.
One thing I hear a lot is that the US has more debt than China. That's actually not true, but I'll show you where it comes from. If you look at only the central government's debt to GDP, the US is higher. But if you look at the total debt to GDP, China's is higher. Still, that's only part of the equation. To really understand the differences, we have to separate the debt between central government debt and everything else. For you and for me and for local governments and corporations, anyone that doesn't have the ability to print money, debt is about whether you can pay it back. It's kind of like, okay, is $1 million of debt a lot? Well, it depends. If you make $20,000 a year, it's definitely a lot. If you make $1 billion a year, it's nothing. So look, it's not the absolute amount that matters, it's how easily can you pay it back. That's the question. That's an easy concept. But what few people understand is that it's different for central government debt, at least for governments that can print their own currency. If you can print an unlimited amount of money that you owe, you can always pay back your debt. Even Warren Buffett said,
"You do not need to worry. As long as the United States government borrows in US dollars, there is no possibility, none, of default."
So for central governments like China and the US, what matters is not whether they can pay back their debt. They can. It's at what point investors start to lose faith in their debt and look for alternatives. And if that happens, the outcome is not a debt crisis or default. It's gradually higher interest rates and a weaker currency. In smaller, weaker economies like Zimbabwe and Venezuela, large unsustainable debt levels have led to hyperinflation and debt crises. But those things are much lower in risk in China and the US. Listen closely because this is important. In the US, that risk is especially low because the US's economy strength and the dollar's reserve currency status create built-in demand for US debt. That brings me to another point I often hear people make. The US has a lot more foreign debt, or what's sometimes called external debt, owed to people, companies, and governments outside of the US. True. You can see from the light blue section that about 30% of US government debt is external, compared to hardly any for China. But the assumption that that means the US has a bigger debt problem is incorrect for 2 reasons. On the US side, we just discussed how there is built-in demand for US debt and it's completely sustainable. One of the many reasons foreign governments feel comfortable owning a lot of US debt is that they know they'll get paid back. On the China side, what people miss is that their debt is a lot more expensive. Let's take the US first as a baseline to compare to. With rising US rates, interest cost on US debt rose to a 21-year high last year to 1.9% of GDP. If interest rates stay high, that number will keep climbing, and that will be a problem. But at 1.9% of GDP, that's still less than half of what it is in China, where interest rate payments on their national debt make up more like 5% of their GDP. So the important thing to understand on the central government side is that while the US does have a higher percentage of central government debt to GDP, and more of it is external, it also has entrenched benefits China doesn't have. And most importantly, central government debt is not as big of an issue as other types of debt for countries like China and the US. Bigger issues are in debt that is owed by people and entities that can't print money to pay it back. And that kind of debt is 220% of GDP in China, compared to only 127% of GDP in the US. There are 2 reasons why this area is a much bigger problem for China than the US. First, because it'll be harder to pay back. And second, because of the impact that has on the rest of the economy. Let's start with how hard it will be to pay back. There's really no threat of widespread defaults in the US right now. To look at company debt, I pulled the spread on high yield, aka junk bonds, over time. These are the riskiest companies' bonds, and the spread is how much extra interest they have to pay over treasury bonds. When there's a higher risk of defaults, the spread, or extra compensation investors demand to take on the risk of lending money to these companies, goes up. You can see it spiked in 2016 when oil companies were failing, and in 2020 when a lot of businesses were forced to close for an unknown amount of time. But right now, there's no major sign of stress in US companies. The same can be said of US local governments. You can see here that state and local government debt, which are called municipal bonds and have their yields shown in black, actually pay even lower interest rates than US treasuries in most cases. That's actually normal because they come with tax advantages compared to treasury bonds, but if there were widespread concerns about defaults, it would certainly not be the case. China, on the other hand, is a very different story. Let's start with whether their companies can pay back their debt. In most sectors, there's no problem worth mentioning. However, in their property sector, there's a huge problem that we can't ignore. As I'm filming this, over 50 Chinese property developers have either defaulted on their debt or missed interest payments in the past 3 years. Evergrande, which used to be the biggest one, just filed for bankruptcy. Country Garden, which is now the biggest, is on the brink of collapse and might not even make it through 2024. This is a huge problem because China's property sector is responsible for more than 25% of the country's economy. And what about the local governments in China? Well, they're also having a lot of trouble paying their debt back. The local government debt crisis stemmed from a fundamental flaw in the system, where local governments are responsible for about 80% of the government spending, but they only collect about 50% of the tax revenues. So in order to make up that shortfall, they have to sell land to property developers. They also have restrictions, for good reason, on how much money they can borrow. So in order to get around those rules, they created what are called local government investment vehicles, or LGIVs. These are like local government owned shell companies that can borrow money and make investments on behalf of the local governments. But since they're technically a separate entity, their debts don't show up on the government's books. Their debt is hidden, essentially, from the official numbers, which is why this has come to be known as shadow lending. They're operating in the shadows where they can't be seen. No one really knows quite how much LGIV debt there is, but estimates I've seen usually have it at more than 50% of China's GDP, aka the amount their economy produces each year. So remember, when you can't print money, it's the ability to pay your debt back that matters. With so many property developers failing and the real estate market slowing, local governments can't sell as much land to get the extra revenue they need. They also can't borrow as much anymore to make up for that shortfall because President Xi has been cracking down on their debts. So if they aren't making as much money as they owe and they can't borrow more, they won't have enough money to pay back their debts, either the official ones or the hidden ones. So sure, the central government is okay, but many local governments need to be bailed out. That's the number one reason that debt is a bigger problem in China than the US. They have a lot more debt at the corporate and local government levels, and a lot of it will be really hard to pay back. The second reason that debt is a bigger problem in China than the US is what the debt will do to the rest of the economy. The property market and infrastructure spending have been responsible for a huge portion of China's growth. With property investment slowing because of the need to crack down on all their debt, that growth will be much slower. And if the property market slows down, land sales slow down. Fewer land sales and a crackdown on local government borrowing leave them with not enough money to pay back their debt. And who's responsible for 80% of China's government spending on things like infrastructure and public services? Local governments. Then to take it a step further, a lot of the bad LGIV debt is held in bank wealth management products, which are investment vehicles that rich people buy. Many of those are at risk of failing. 37 of China's 68 trust companies either saw a profit decline of more than 20% in 2022 or didn't report any data at all. And if a company doesn't even report its financial data, that's how you know things are really bad. More than 10% of China's trust companies have already defaulted on their debt, including one in August. If the trust companies, wealth management products, and LGIVs all start failing, we have a full-blown financial crisis on our hands. So here's what I think will happen. Obviously, this debt in China is completely unsustainable. But China's central government has the ability to avoid a financial crisis by bailing out any of the troubled parties I've mentioned up to this point. And I think that's exactly what they'll do. In addition to the tools that the US government has, China also controls most of the big banks and can more or less tell them to do whatever they want. They're already being told to extend the maturities on bad loans in the areas we've talked about. Extending the maturities essentially means that if, say, an LGIV has to pay back a loan to a bank in 2023, but they don't have the money, the bank will say, it's okay. How about you just pay us back in 2026 instead? That's what's called defaulting on your debt in most places. Bank of America and JP Morgan would not go for that. But in China, the government controls the banks. So I believe they will play the extend and pretend game with a lot of these bad debts. If that happens, they'll avoid a major financial crisis, but more and more of their resources will be soaked up by inefficient zombie firms and bad debts for years. That will certainly dampen the country's growth for the foreseeable future. So to recap, these are the three main reasons why China has a bigger debt problem than the US. First, more of China's debt is in companies and local governments, whereas more of the US's debt is at the central government level. Central government debt isn't as bad because they can print money to pay it back, and the US pays a lot less interest than China on their central government debt. Second, China's property developers and local governments both have significant debt issues, whereas US companies and local governments do not. And third, property developers and local governments have been huge sources of China's growth over the past few decades. Even if bailouts avoid a debt crisis, losing those sources of growth will have a huge negative long-term impact on China's economy. Last thing, I just launched a free currency course. It's actually 10 videos and will teach you how governments manipulate currencies, how to invest in currencies, how money is actually printed, and much more. If you want free access, check out the link below in the description. Thanks for watching.